Good morning. It's Monday, February 24th, about 6 a.m. Central Time. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's get you ready for the trading day. Take a look at precious metals, futures, in the commodities market. So starting with the U.S. equities here, we do have a bounce back up about 32 points on the S&P 500. Trading last at 60.61 and just off the high of the overnight session of 60.67. The low is 60.34. So a big snapback here from Friday's major sell-off here. The S&P 500 is up about 2.25% here year to date. So the indice, something you have to remember here is that last week Friday's sell-off did look pretty aggressive, but last week we did hit a all-time high on Tuesday before falling 3 to 4% on Friday, and it was the release of the flash services PMI data that's slipping below the 50 mark and really signaling a contraction while consumer sentiment hit a 15-month low on this lingering inflation data. So it's the softer than expected economic data, the persistent inflation that leads to the stagflation concerns. Remember, stagflation is one of the best economic environments for the gold market. Now, looking at dollar and yields and the impact that had, we saw the yields retreat here, and it's the softer data. While the dollar, it did slightly edge higher, it's coming under some pressure in the overnight session and is down from those 2-year highs. So many people believe that the higher tariffs mean a stronger dollar. However, I believe that President Trump is using them more as a bargaining tool rather than this long-term solution. In the overnight, he had told Mexico that they should implement higher tariffs on China, and if they do so, that we would reduce some of these tariffs that we're proposing on Mexico. And you could see it's that kind of rhetoric here of using those tariffs as a bargaining tool rather than a long-term policy solution. Now, turning our attention to the metals markets, and overnight, you do have April gold, the last trade here about 29.5740. That's up $4.30. It is the only metal here that is green on the screen. You got the overnight highs, 29.6370. Many of you have been working sells at about the 29.64 level. We've come up to that high several times over the last 4 or 5 trading sessions. We fell just below it here today. We'll see if we can recharge and regroup and move higher once the overnight session ends and the day session begins, where we've seen this kind of pump on the first initial opening of the day session, and markets seem to come off here into the European close. The low of the overnight session, 29.3680. Looking at the silver market, down about 20 cents right now, 32.81 and a half as of this recording here. Overnight highs are 33.12, getting back over that 33 level. But remember, there's been a lot of areas of support and resistance just beyond $33. So 33.03 and a half for a while, 33.08 and a half held support 2 days in a row, and it was this 33.19 to 21, which was a major resistance point for several trading sessions here. So you do have a lot of headwinds just over that $33 range. Now, the decline that we're seeing in silver, and especially on Friday, in comparison to the support and the rally we're getting in the gold market, it pushes that gold-silver ratio back up to 90 to 1. So, once we get over that 90 level, that's where I really start to put more focus on the silver market and playing more of a snapback and using more aggressive strategies, things like options that are more leveraged than the futures contracts here. So we're going to be exploring some of those perhaps here later today. Not a recommendation out to the public. It's something that we'll be doing with our clients here at Blue Line Futures. If you'd like to open up a futures trading account, send an email to info@bluelinefutures.com. We'll get you over the account opening link. Takes about 10 minutes to set up an account here. Now, gold is headed for its eight consecutive week here as you get that safe haven demand pulling up, and it's fueled by some geopolitical uncertainty and a lot of trade tension. So we did see gold, it did edge lower, got down to about 29.26 an ounce on Friday, but it's about 1% higher is where it finished out the week, and the market is really seeing quite a bit of inflow, especially on the ETF side. So it's the 8th straight weekly increase, and it's the longest winning run streak since 2020. So you look at the ETF holdings here, and that's globally. It's the highest since January of 2024, with more than 16 tons added so far. This was last week, and that puts it on course for another biggest weekly influx since 2023. So you're really seeing the ETF flows come into play here, and that's why I believe that gold futures could hit the 3,000 mark, the 3,100, about $3,300, especially if you get the ETF flows going in. You get the stagflation concerns continuing, and then you also get the central bank buying also continuing in this markets here. So you did see the market, it hit that peak here last week, and then there was a discussion that the unwind of the Russia-Ukraine war, we saw a lot of those tensions and a lot of things kind of die down here, and we saw some of the money come out, especially from the geopolitical concerns here. Oil futures were another position on that, where we saw oil fall to a 2025 low, and it was their lowest closing price of the year. And there's some discussion about there is a hard stance on the Middle East, on certain areas of that, especially Iran. However, Iraq could really come in and step up and provide some additional support, some additional increased flows here that is going to weaken some of those supply constraints here. So we've seen crude oil fall for about 5 straight weeks, longest streak in more than a year here, and it's trapped in like a $5 range. I call it from $70 on up to $75. We're trading right now $70.50 here. So it slid about 3% on Friday, got down to about 70.40, and it was its lowest level since December 26. They dipped below the 100-day moving average right around 71.51. Now, on a positive note, you might see OPEC Plus. They may plan on delaying their production increase, and they've postponed this for four straight meetings. So we're going to have a lot of key events coming out this week. We're going to have consumer confidence on Tuesday. We'll have goods trades balance and new home sales on Thursday. We're going to get GDP data from several different countries here. And then you're going to get on Friday here the Fed's preferred inflation metric, the core PCE, which is consumption expenditures price index here. It's expected to cool to 2.6%, and that's on for the January reading. And despite the decline, policymakers are still going to keep those interest rates on hold due to the components that are registered in it are still holding that inflation running a little bit above the Fed's target of 2%. So you got any questions, give us a call here, 312-858-7303. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.